Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday, the 7th of September, 2017, getting on to 3:20 p.m. Central Daylight Time. Interesting day. The grain markets were lower. Even the cotton was down, even with Irma making a run now that as we get closer, we'll find out if it's going to hit Georgia, the Carolinas, cotton areas or not. OJ, which dropped 5 cents yesterday, up 5 cents today. So these hurricanes are really creating havoc. You saw today the euro soar. That's a correct price, 120.29, and the dollar dropping away. We had today the European Central Bank statement, and basically the inflation is not being met, but they are looking at an economy that is still growing. It sounded good to people, so euro gets the bid and the dollar got an offer. As we come to the soybeans, we're still up for the week, 21.25 cents going into Friday trade. You've now come from 9.17 about 4 weeks ago, up now to a high this week of 9.70, and you finished at 9.63.25. As you can see on a daily area chart of closes, you've settled back from yesterday's high close, and now you've got a close here around 968.75. As we take a look at a daily bar chart just from low to high, this is still the swing to the upside. It's still rather impressive. And the question is, do we finish off at the end of the week with the market breaking down, or will it basically hold on to this pattern? Any way I go about it, the pattern is still not a trend. And that's because you have a lower low. You see the swing line low here with the arrow pointing up. And then we took out this last time when we went up here. So I've got a pattern of a higher high and lower low that is not a trend. As I mentioned yesterday, on pullbacks, which it looks like you're in right now, if you get enough of a break, you might first challenge the first resistance zone of the 100-day average, which could become support. But if the market gave a lot of ground, 943 is the next support zone in the market, the 18-day average of closes. I think the reason the market's pulling back here is that the market's got the upper Bollinger Band as resistance. Now, if you'll recall yesterday, I went through an exercise where I explained that you had 2 days over the upper Bollinger Band in a row. The math of this algorithm is that only 5% of the time will you trade and stay above an upper Bollinger Band. The word is stay above one or under one. I've taken it further and I've created some rules of thumb which gives a percentage point of those 5 percentage points, each one if the market's in a successive move over it. So you had 2 days in a row over it. That gave only a 3% chance today of the market closing over it. And what did it do? Right at the end of the day, the market closed 1 cent under that top Bollinger Band. So what the market is right now is it's excessive, yes. It's riding the upper Bollinger Band. The bias is up, and you're in an overbought condition. I viewed on the slow stochastic, which is an oscillator of momentum, that any reading in this oscillator that is over 70 without both numbers, the K and the D lines, the two numbers to make it up, going sideways over 80 is an overbought condition. So I view the market as overbought into a resistance point. If it pulls back, 59.5 might be the first support zone. When I come to the meal market, same story. It was the same look yesterday. If you look at the close today, you finishing the day with a settlement of 307.20, the upper Bollinger Band 307.70. The market couldn't quite make it up to the 100-day average. It's an overbought market. The difference here between soybeans is you do have a pattern of higher lows, higher highs. I would expect that more support will be found on a break to 380, but that overbought condition will probably stay bothersome to traders. In the soybean oil market, you have a reading with both numbers over 80 today. Now you can see it right there. They were both over 80 yesterday, but not the day before. In order to embed, which means convert a market from being overbought to locking in a bull trend, Both of these numbers need to close over 80. I'm sorry I have the 75 scale there. I should have pulled that down. It would have been 80. But you can see the numbers. You need another day of that tomorrow, which means what? It means the trend is up. The market has hit its upside target. It did it 3 days ago. And it could convert from out of overbought into embedding, which would give the market another favorable look. In the corn market, the battleground is being shown to you. It's the 18-day average of closes. I call that number the line in the sand. And the reason is, if you understand moving averages, traders like to look at an average as a pivot, a key number. You'll hear people talk about in the stock market the 200-day, the 50-day, the 100-day moving average of closes, and they'll say the market hasn't closed under that yet, so the bias is still up. Well, in this case, the resistance is the 18-day average, and I do treat moving averages slightly different in futures because by its own nature, every futures contract expires. You don't expire Microsoft, okay? You could expire an option on Microsoft, but you're not expiring Microsoft. December corn will be gone in December. So I use them a little different. Plus, traders move to contracts of large open interest. They come to the nearbys, or the contract that they think if it's a crop year, one might be an old crop, one a new crop if it's in the grain markets. In the financial markets, it's typically the front month that gets just about all the volume and open interest. Open interest represents the amount of contracts that have been created by a new buyer and seller coming together. Got that? That's what that represents. Well, in this case, if you take out 354 3/4, you will lose your idea of higher lows and higher highs. The market so far in this whole rally has not been able to close over that 18-day average. It could become a much better looking chart tomorrow should prices take out 362 1/4 and close over 359. We'll see if it can do that, or if it gets under 354 3/4 and puts the market back onto the defensive. In the wheat markets, the same battle as the corn. You are just riding this 18-day average of closes. The difference is you have a pattern of a lower low and a higher high. And here's an ugly thing that just happened. Yesterday, you had what's called an outside day up in the wheat. You took out both. Tuesday's low and high and closed higher on the day. This would be called a bear trap. A bull trap. Bull because you had an up day if you take out today's low, which it did. The problem is it did it literally against the 18-day average, which is typically the objective. So don't know what to do with it other than a failed pattern. In the sugar market, I keep being bothered by the fact that this market is staying overbought, number one. Number two, I see upside limited at this point between the upper Bollinger Band, 1456, and 1457, the 100-day average of closes. It would be easier for this market to throw out a sell signal should prices get underneath 1367 than it would to be a buy anywhere up here. Now, until that pattern's broken of 1367, I would expect to see the nimble trader trying to buy it at 1375 with the tight stop, trying to see if you can get it higher. In the coffee market, you lost the embedded reading today. Do you see how that red line came up? Often when that takes place, price and the 18-day average come together. So I wouldn't be surprised at all to see a rally tomorrow where the prices try to get up to that number and then, like a pinball game, it start again. The fact that you're already oversold is the problem. You can't, even if you come up there for a sell, do you want to sell into an oversold condition? I'd leave that to your discretion, but I can see it the way that I teach charting would be a problem. As you can see in the OJ, a big outside day down, a big rally today back up. So yesterday you finished in the market down 420 points. Today you're back up 555. You're over the upper Bollinger Band today. You weren't yesterday. But what you're playing isn't orange juice. You're playing Hurricane Irma. And that's up to you to play. What can I tell you? You're overbought on the chart. The market isn't really trending. You got a lower low, a higher high. You certainly have upside bias. You see that in the momentum pointing up from stochastics, and you're over the 18-day average. But what's it going to do with Irma? If it hits Florida hard and hits where the orange juice is grown, be careful. What's the number? I mean, in America, that's our biggest orange juice state. So got to be very, very careful. Admittedly, Brazil is huge in orange juice, and they keep expanding their production, but it would still do devastation here. Cotton is the same problem. Now you have the embedded reading, so it's bullish. It'll fall and fall hard likely if Irma doesn't do any damage. It can continue a rally to God knows what if all of a sudden Irma starts taking out East Coast cotton areas. You just have to understand that you don't have control of these things and understand what you're looking at on the chart. In the cattle market, you want in reverse course. The momentum was oversold. It's trying to turn up, and now the pattern is a lower low and a higher high. This is a market that is just churning within this area here, not really giving you an awful lot to do one way or the other, and the same as in the feeder cattle. Squint your eyes and just look at the black line. You're caught in sideways action here, and instead of going to the lower line on the Bollinger Band, you keep coming back to the 18-day average of closes and then up to the 100-day in the upper Bollinger Band, and you're not able to break out of that yet. Momentum is certainly pointing to the upside, but you're trading at the 100-day average, and you hit the Bollinger Band and ran into a brick wall. The market that's the surprise is the hog market. It is unable to follow through and get up to that 18-day average. It's oversold. It's got the swing line with higher lows, higher highs, but can't get the bias up as it can't get over that 18-day average of closes. I want to remind you about a great publication called Consensus. I've been reading this, I don't know, maybe since they came about. It's many, many years. I'm not talking 10, I'm talking many years. And what it is a compilation of a number of newsletters sent into them by different brokerage firms, and then they publish them under titles like soybeans, foreign currencies, the gold market, the silver. You can see all the different contributors, and there's, I'm sure, more than this. They keep adding to them, and you get to read the newsletter, and then they take those newsletters and they create their bullish sentiment index. And they look at the letters, how many are bullish, bearish that are being written, and it gives you an idea, almost like if you were watching what the CFTC is showing you when the volume and open interest numbers come out at the end of the week. I think it's fascinating. You get a 4-week free trial. All you need to do is, you'll see on our website, fill out the form for it. You can do that by either giving us a call, by the way. We can do it for you at 866-973-2077. You can click right up here at any point, and when you do so, you'll see an icon if you're looking at me on YouTube. That'll bring up the form. Underneath us on many websites, it says click here for Ira's free offerings, and/or you can always, of course, go to our website at www.iraepstein.com. You'll be able to see everything. Your carousel of offers there. Just click one. The form will appear. I'm Ira. You have a great day.